Cramer, who is the annoying host on the show Mad Money on CNBC.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make some money.
He knows all about the playing field because he used to be a hedge fund manager before he became a TV star. In December 2006, he did an interview where he exposed how hedge fund managers can drive the price of a stock up or down.
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money.
Hedge funds will do whatever they can, even to commit illegal acts, in order to save themselves. The most common tactic hedge funds use is media manipulation.
When your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game. If I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone and you call 6 trading desks and you say, listen, I just got off the phone with my contact at Verizon. And he has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. You know, I think that's a very effective way to keep a stock down.
Right. What he's saying is that hedge funds literally feed the media fake news in order to make everyone think that there is something wrong, and then they will start selling the stock. And this selling pressure will then drive a stock down, which is exactly what the hedge funds wanted in the first place. This is what I mean when I say that they don't predict where price is gonna go and hope that it goes in their way. They engineer the outcome to their favor.
And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it.
Right, but what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction. The fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions?
If you are a trader, you've probably heard of the phrase, buy the rumor, sell the news. This phrase means that traders will buy the stock when a rumor about a positive news or event is circulating. This expectation that something good will happen will then raise demand for the stock, causing its price to go up. However, when the good news actually comes out, the market may react differently than expected. For example, even though the news was good for the stock, the price of the stock might still go down. Every trader or investor thinks that to make money, you just need to buy stocks of good companies and only sell companies that you think will go down. After all, it's all about the fundamentals of the company, right? Wrong.
So you're talking about the mechanics of the market.
Well, mechanics are much more important than the fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you think.
Who cares about the fundamentals? Research in motion just blew out the quarter.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game.
This just proves that understanding fundamentals are not important as understanding the mechanics of the market. You see, these manipulators do not give a shit about you. All they care about is themselves and how much money they are going to make. That is why they will continue to manipulate the markets to their favor. And the truth is, there is nothing we can do to stop them. However, what we can do is to trade with them instead of going against them. At the end of the day, you have to understand that they are the ones with the power and the money to move the market. If you trade against them, it's like going against a strong wave that will devour you.